Hi traders, sorry for that delay there, but we are going to start now. Today's focus is going to be on wide open spaces on the chart, and you might be wondering, what are wide open spaces? And that's what we're going to be, explaining how you can find them by using technical analysis, of course, looking at patterns, market structure, support or resistance, trends, and yes, then we'll find spaces with a high probability that there could be, price could move into that zone with more speed. Price could basically show more momentum, as it's called. So if you're new to this, webinar and some terminologies or terms are unclear to you, feel free to use the chat and reach out to me. In the meantime, though, before we take a look at the charts and price action, be aware, wanted to let you know there is a special coming regarding Christmas from Admiral Markets, coming early. So please check that out regarding how to get more info on admiralmarkets.com, basically. So check that out. Also, before we dive into today's webinar, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer, and you are aware of the risk involved when trading. Also, please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if this webinar is suitable for you. And by continuing watching this webinar, you agree with this disclaimer. Alrighty, so if you're wondering what is this Christmas special, as I said, let me just show it to you, though. It's always a little bit easier. Just type in admiralmarkets.com and you will get the page with more info where you can see the details of, it's at the front page here. You see apply now, click on the red button, and you'll get more details regarding that particular special. And of course, the newest info in the slider right here with regard to Supreme Edition, for instance, extra features exclusive to Admiral Markets traders, so you might want to check that out too. We'll show some of them on the MT4 platform, as we always do, and you can download and check that out by going to platforms and then clicking on Supreme Edition, second button right here. So check it out. A lot of good info here about how to trade and analytics and education and what you can trade, etc. And Christmas comes early is page. This is how it looks like, and this is how you can qualify and your benefits, etc. Alrighty, so now it's all about taking a look at the charts together. So let's move on and take a quick look here what we can expect. So with regard to open spaces, wait, I see that you don't have there. Now you should have the full screen. So let's take a look at an example first from the past, so you have a little bit better idea about what to expect, from the future, perhaps. All right, because patterns repeat, and we can try to capitalize on that. Of course, things are not always exactly the same, so we have to be flexible as traders, but we can try to capitalize on patterns that repeat. So basically, for instance, trend is a pattern that repeats, right? Higher highs and higher lows, or lower lows and lower highs. So when I talk about wide open spaces, for instance, on the euro dollar, the most recent example, from my point of view, was the euro dollar when the price was in this zone here. I had a fib from here to here, and I was looking at price bouncing at the 61.8 fib support, the long-term moving average as well, and was considering the fact that there could be a continuation up to 120 as price basically breaks out for a wave 5. So this was, in my view, wave 1, this was wave 2, wave 3, this could have been a wave 4. I was looking for a wave 5. I wasn't sure if that was going to be a wave 5, but if price was going to break above this resistance trend line, I thought that chance was pretty high. So where's the wide open space is basically from the trend line towards the target. And you can see that we had a target, the minus 272 target, and a minus 61.8 target. That's a pretty decent space, right? So this is maybe not wide open, but a pretty open space. And specifically for intra-week trading, it was around 117.50 up to 119.20. It's It's about 170 pips, not bad. So that is a zone where price has, in my view, a high probability chance of getting from point A to point B. And of course, it could stop along the way. You can see there are some candles that hesitate here as it tests this resistance, but ultimately it breaks and continues. Right? Then it hits the minus 272 target. It makes a little flag here, ultimately still continues. Then there's some divergence, and then it starts to make a bigger correction. Right? So when price starts to fall here, the space is less because we're expecting a correction like this, so there's less space. So even though that when doing analysis, my analysis proved out to be correct, indeed we are getting a bearish ABC, that is indeed happening, and this is something I said pre-fact, the space for that ABC pattern is not as wide, right, as this particular breakout trade. So not every pattern, not every point on the chart will have the same kind of space, right? It all depends on that market structure. So sometimes that might seem interesting, sometimes it might not seem interesting, depending on this analysis, really. So now if you were trading it up in here, maybe, right? Yes, there was some space down to here. So trading wave B, or maybe not right away at here, but a little bit of a confirmation, maybe up here, had some merit to it. But that was also before the weekend. So practically speaking, maybe not so handy. And after the weekend, we had a gap. But not easy to trade this euro dollar downside, because one thing is because price has already moved away quite a bit from this bouncing spot, and a potential new support level is quite close. So it's not a spot where there is a lot of space. So you see how the difference between where there is more space and there is less space. Now, calculating space really is a mixture of market structure. Market structure depends on three things: trend and momentum, support and resistance, and patterns. So, and it also depends on what time frame you're looking at. If you're trading it on a weekly chart, this breakout from here, upon that resistance trend line we just spoke about, towards the resistance up in here, is quite a small space for a weekly chart. It's good for the 4-hour or 1-hour chart, but for a weekly chart, it is really not that substantial. So, if you're trading higher time frames and you're looking at this breakout, you would actually maybe think, well, quite a tight space. I'll skip this breakout. I will wait for price to make an ABC, and I would rather try to look for a long here, which has more space for that bullish continuation, if there's a confirmation of the bounce at that blue circle. So it also, is relative. What time frame are you looking at? So a weekly chart trader might see this breakout of this daily candle, but might think, well, I'm looking for a longer trade. Now, I don't think necessarily there are many traders in this webinar that are looking for weekly setups, but just to give you, a frame of reference, that it does depend also from everyone's viewing point, and that really changes from time frames and from our perspectives. But ultimately, we can calculate the space from these three points, this triangle: trend, support and resistance, trend and momentum, support and resistance, and patterns. So a weekly trader might rather be more interested in, if looking at this as a 5 wave, this may be as a wave 1, this may be as a wave 2, and looking for a bounce at the 61 or 78.6 fib. And if it does bounce, there is at least some space before price hits this resistance trend line, right? So that's good. And if it breaks, then we have space to the minus 272 target. If that breaks, then we got even more space. So there's a decent potential to the upside right here. So that is a good space for such a trader, and might be interested in thinking about trades to the upside based on that. Now, of course, candlestick patterns here confirming that bounce in this zone could be good, because just because there's space doesn't mean that price will necessarily respect those levels. That is something that always, of course, these decision zones are zones that might be respected, might be used, but unless there's a lot of confluence, I rather wait for candlestick reactions in those zones. But once price either reacts to the zone or a pending order is used at the zone and price indeed turns at that zone, then you have an early entry. If there is a turn, then of course, then we have that space. So step one is doing analysis. Trend, momentum, support or resistance, patterns. Step two, what are key decision zones? And what am I waiting for? How do I trade it? Am I waiting for any trigger there? And then step three is actual trading it. So for instance, candlestick pattern here at the 78.6 fib, bullish engulfing twins on daily chart. I would take the entry upon the candlestick pattern. Stop loss goes below the bottom, and I scale out half a position here and half a position when it gets to 122.50. So that's a trading plan example based on the analysis and the decision zone / trigger. So step one, market structure, MS analysis, market structure analysis. Step two, decision zones plus how do we trade it? What are the triggers? Step three, is the trade plan really. And step four actually is the trade management, isn't it? How do we manage it? That's again a separate topic. We won't dive into that. It'll be too much. And what we're really looking for are, with regard to the first two steps, is preferably spaces, points on the chart where price gets to when price gets to the decision zone, we are expecting a pretty good space. Those are the nicer ones. Of course, it's also nice if there's a lot of confluence of support or resistance, because the more confluence of support, the more confluence of resistance, the higher likelihood that price will also respond to those levels. So one thing is the strength of support or resistance. The other thing is how much space do we have or expect before price runs into some level that might be the target. Here we had this space. We expected it based on our analysis. Let's take a look at one more example. With regard to the euro dollar, for instance, I remember we were looking at, okay, this is a correction, and this is a correction. So if it breaks below support, there's going to be a continuation lower, down to a lower fib at 115 and the moving average, which indeed happened. It missed 115 by a bit. Full clarity here and disclosure, it went to 115.50. But still, right, the breakout here, we did get downside from 117 to 115.50. So was there a lot of space? Well, we ended up getting a move down of 150 pips. If you would have asked me beforehand, it looked like a 200 pip space. So not a lot. I mean, it's enough for an hourly trader, but is it a lot for a daily or weekly trader? Not that much, right? The downside does not look that interesting. It is probably looking more interesting to wait for price to get down to support and then turn, because when it turns up here, we have more space before we might expect price. We might expect price to bounce at this 38.2 fib here at 115, and we might expect it to retest this top. So what has more space from a daily point of view, right? This move down or the bounce and to challenge the resistance? Obviously the second one. So for a high time frame, that second one is more interesting. But it doesn't mean that the first one couldn't offer some trades, but probably the space is smaller. So if traded, it might make more sense for lower time frames. So that's let's say an introduction. I personally use my own tool, which I gladly share with you, no problem at all. It is I call it Wiz Tool. And what I like to do, it's best for hourly and 4 hour. You could use it for other time, 50 minutes. You can use it for other time frames too, but it's more optimal for those time frames. What I like to do is let's take a look at a chart that really was pushing a lot. Maybe this. Let me think for a second. What could be a good one? Maybe the pound odd. Pound odd is maybe the best. So what I like to use, one of the tools I like to use, and that's so the first step. The first what I discussed was trying to get a understanding of market structure. What I'm showing you now is something as an additional tool that could be used for understanding where the space is, but it is a bit quicker. You could just have to add basically the script to a top or bottom, and with the trend. So in this case, we're looking for this top because this is the top that is closest to the long-term moving average, which I use 144 EMA, and it plots basically. I didn't want to use it on the 50-minute chart, so let me use it on the hourly chart. Hang on. And it plots sequence levels, fib sequence levels. The cool thing about it is that it does it automatically. So you just have to find the top that's close to the moving average, which in this case is this. You can also use this at the very beginning. You can even use this to see upside target if you're not sure what the trend is. But basically, with the trend is our main purpose. We're looking for, and the cool thing about the tool is that basically it shows the spaces between these Fibonacci sequence levels. So here you can see space 1, space 2, space 3, space 4, space 5. All right. And the most space is when price breaks the third level down to the fourth down to the fifth, and the fifth down to the sixth for some of the currency pairs, like pound yen, the bigger movers, pound odd, pound New Zealand. It is not a picture perfect tool. As you can see, it didn't fill up this space. But I think you will be surprised how often it is pretty accurate, right? In any case, this move down here, indeed, you can see how price kind of steams through that. So often you see price pretty choppy within the first three moves, and then once it breaks below the third, it kind of and break below the fourth. There's a higher chance, at least, from what I've seen and my testing, that price will accelerate and show more momentum. So if you're looking for a zone, this Wiz tool that I created is based on a simple concept, but the tool itself just does it automatically. Otherwise, you would have to do it manually, which is not really, it's a bit annoying work to plot these levels, all these levels manually. Then there are more of them. So, eventually you can kind of stop doing that. It's too much work. But so this is useful for finding zones too, pretty quickly, just and pretty simply. Right. So that is useful. If you're interested, just send me an email. So I will send it to you who are live in the webinar here right now. Those are those that are looking by any chance at the recording. Just pause this video then to write that down and let me know. It's called Wiz. All right. Let's see. With regard to, so that's about it, market structure and this Wiz tool. That's, from my point of view, the best way to look at spaces. This also allows me to try to catch that occasional bigger trade, and that's how I try to get winners, try to basically let winners run. Basically, that's one of my methods. And then on the other hand, I try to cut losses short by using my trade management method, by using time factor. I have a specific way of trail stopping the trail stop loss as well. And that, please check out Admiral Markets YouTube channel. Go to look for trade management, and I explain my method there. So that's how I keep losses short, and this is how I try to keep some winners uh, open for a longer target and a bigger target. So, and if I do all, both, I get a pretty good R2R ratio because of that. Often, on average, more than 2-to-1, around 2-to-1, but typically just a little bit more than that. So we can take a look at maybe the live markets now. I just want to give you some, ideas about that. Does anyone have a particular pair in mind that they would like to take a look at, perhaps? Anyone have a preference? So your dollar we covered, really, I don't see much space to the downside here. Yeah, it's true. I don't see much space, but I think it will move lower. It's just, it's going to be a C wave, and it might not be. It's going against the trend, so it might be choppy and slow. So I don't think there's a lot. There is some space, not a lot of space. I think that trades to the downside with euro dollar will make sense. Maybe not right now. Seems to be at Keltner. By the way, this is Keltner channel. Long-term moving average, bottom here. So I was thinking about euro dollar here, and on a 50-minute chart, I actually told some traders that watch out for the pullback and continuation. So yes, there was some good shorts up in here, and fell a good 50 pips. Now, maybe not the best because it just bounced off S1. So yes, here that made sense. Now, I'm not sure about now, particularly now. I think maybe could be to wait for today's daily candle. If it closes near the low, I think it could be ready for maybe a small retracement of today's candle, and down it can go to the S2. In that case, if we have a bearish close of the euro dollar with a daily candle close near the low, then the S1 looks like there's a good chance, in my view, that price will break through the S1 tomorrow, maybe Thursday. I know that there is a lot of news coming up. I think with regard to, or the NFP is Friday, isn't it? There's no dollar news tomorrow, is there? I will check it. But pending that, I think that tomorrow there could be this breakout then, if we get a good daily candle close. So I think there was a good euro dollar trade, as I was warning some traders already earlier today, with the euro dollar here, as it basically bounced back like this, pullback continuation. But now would we wait for today's daily candle? If we don't get a good daily candle, then we might actually get a move up, and I think that could be even a little bit more interesting to see if price could close that gap, hit the weekly pivot point, or even maybe the R1, and those could be bouncing spots for the downside again. And then there is more space, by the way, before price gets down to support. So I think that kind of makes the most sense with regard to the euro dollar at the moment. Tomorrow, ADP for the dollar, and crude oil inventories, maybe some other lighter news, but those are the two major ones, I think, and a Canadian interest rate on Wednesday. Let's take a look at the dollar yen. Dollar yen, I think, at the moment, in uptrend, but it is kind of at a crucial spot. I think as long as it stays above the weekly pivot point, this is Admiral Market pivot point, also one of the tools from the MT4 Supreme Edition, by the way. And just like this mini terminal, by the way. So I think if there is a move down, this space here doesn't seem to be like that interesting because it's only a small space before we hit the weekly pivot point. There's a gap here that could be closed pretty soon. So there's a support zone down here that's not too far. So this space to the downside does not seem interesting. Therefore, I wouldn't be interested in trading it. I think that the space to the upside is very interesting if we get a bounce because then price can go all the way up to the R2. So where's the space? In my view, up from the pivot point or from the gap close upside. If price, however, shows momentum above the R1, there could be an immediate breakout. And that space is maybe not as interesting from a space point of view, but still overall I think could be interesting due to the fact there could be a wave 3 breakout. From a market structure point of view, I think that the upside might have some pretty good momentum in it. So that is a particular interesting angle to that breakout of the R1 and that Keltner. And will it show momentum? I don't know. I would be really specific looking at 4-hour candles. I would like to see really 4-hour candles push like this, be trail stopping all these 4-hour candle lows, or not all of them, but any good candle with a good candle close with a good size. And this should show like a move up, maybe a small bull flag at the R2 could happen, but otherwise it should be pretty much up if there is a good breakout. If there's any hesitation, then that's not so good. Then it doesn't look like a wave 3. Wave 3 should be fast. So breakout could be interesting, but with the added note that, in my view, the space, the move up should be quick. Whereas if price hits the weekly pivot point and bounces, then there is more space and a little bit more time for price to make this turn and go up. A little bit more time, because what I don't want to see is downside and the bear flag either. If it makes a bear flag like this, that's not good. What I want to see basically is move down, up, and then maybe some correction. That's okay. Then it should continue higher. And then there's a good space here. So space may be a little bit limited here, but if there's good momentum, it shouldn't matter. Here, more space, but I would need to see a little bit of a good rebound, and then it's okay to see a pattern. Then it should continue higher. Now, if it breaks below the weekly pivot point, then probably it did this, fall, flag, and if it shows a flag that goes sideways like this or triangle at the weekly pivot point, yes, then indeed it is probably going to show space to the downside. In that case, there could be a space from the weekly pivot point down to this at-one market pivot point S1, and then perhaps an extension down to the S2, which is at 110, the round level. So that is my view on the dollar yen. Pound dollar, yeah, let's take a look at that indeed. Just thinking if there's anything that I need to add. Probably not. Let's take a look at pound dollar. All right. Let's see. So pound had this very choppy upside, broke, false break, pullback, second break, true, good breakout, good continuation. So now we're seeing a choppy downside. So the space to the downside is maybe a bit limited. I was, looking at this particular breakout, a bit of a wick here, but I thought still it could make it down to the 61.8 fib. Thought maybe it was just a volatility wick. Although I didn't trade it myself. Doesn't seem like that likely at this moment. There was a little bit of a space to the 61.8 fib there between the pivot point and that broken top. This is basically the broken resistance. For the moment, it's not moving down. It seems to be in a pretty choppy channel. So not maybe a ton of space with a channel like this. Sorry, I'm back. I think there was a connection failure. I was saying that downside space is not much. I think 61.8 fib is the main bouncing spot, but price might not get there. As you can see, it's pretty choppy downside. So yeah, there's not a lot of space here for that downside. A bit tricky to trade to the downside. Best probably is to wait for a bounce at the 61 point fib if it gets there, because then I would expect more space to the upside, right? More space from here up to the target. A lot more space than trading it kind of like to that 61.8 fib. So either from the 61.8 fib or the breakout, those have a little bit more space than trading it here with a choppy channel to the downside. So the bounce or the breakout, bounce seems the best. I'm not sure if price will get there. If it does, that would be good. If it breaks out, looking for probably a good breakout candle, maybe then zoom into a lower time frame, look for some bull flag, and there could be a continuation. I like the deeper retracement more. A bit hesitant with the break of this channel. The channel is first of all a little bit choppy, and I might even skip this bullish break. I'm really not, not too sure about this because we also still have this resistance trend line here. So even this zone could still be actually a bearish bounce back. I don't know. I'm really cautious with this pound. I would maybe really wait for price to get back, and would need to see some significant confirmations here. I'm not even sure, what at this moment. Maybe a daily candle. Maybe some bullish candle piercing through this trend line, retracement of that candle, and it could continue. Not an easy spot. It would be better if it went deeper, but CAD yen. Let's take a look. At resistance. Definitely strong momentum to the upside, but it is a little bit of at a resistance zone. And it's interesting how, when price broke above this local resistance, maybe some resistance up in here too, but when it broke above that, you can see the zones here made a pretty good upside in those zones. Now it is at resistance, but the momentum is pretty hot, pretty strong to the upside. So that's a little bit tricky. And I don't think there's much space to either side at this moment. The thing is that price, if it moves down, it could just go to the 38 fib and easily bounce there. And if it breaks, then there's already resistance pretty close by. So it might be a little bit better to wait for either the retracement to the 38, see if there's some bounce there. Might be the best one. Or if it does break here, there could be maybe a small little breakout trade there on lower time frames. Now, a failure here, is possible. Actually, it's already happening in a way, in the sense that price moved up and wasn't able to break about this top. And that's not so strange in the sense that one, two, three, four, five, sixth candle with a wick. So from this point of view, there is a little, from this candle, failure candle in a way, to the 38, some space. More aggressive reversal traders might be interested in that, reversal trade. But the space is somewhat limited in my view, at least. But it could make this kind of correction, ABC correction, either back to this bottom or maybe to the 38. So you can see there's not much space there. I'm not saying it has to bounce at the 38. It's not a must. But that seems a pretty decent probability to me. I wouldn't aim further than that personally, or expect something further than that. All right, let's take a look at the euro pound, and then I'll have to push off for today. And we'll continue tomorrow, though. We have a new webinar on trading chart space within market structure. It's going to be, this topic will be running for the current December month, both Tuesday and Wednesday. So join us tomorrow for continuation. And with regard to the space, I think good space if price manages to break through the support right here. And we could see an ABC correction like this, continue down to support the bottom and the long-term moving average. Price is trying to break through the support trend line as we speak. If it bounces, there's some space up in here. At the moment, it might make an attempt back up. In fact, I was slightly leaning towards that when price was starting to move up like this. I'm not a big fan of trading euro pounds, so anyhow, there was a big wick on top of that 4 candle. That's just shows you how important it is to sometimes wait for some confirmation. That breakout might have looked interesting. It might still move up, but this breakout kind of semi-failed in a little bit of a way because of the wicks here. So a bit of rejection there at trendline moving averages, but the support is pretty close. So, and it could still make a downside, make a head and shoulders like this, basically use the support zone and still find its way up. So the space still more to the upside rather than to the downside. Problem is a little bit the fact that will it bounce? This is already attempt number 2 on the daily chart, and on the lower time frame, we're approaching it again. Will it bounce is, a good question. I'm not really too confident on the euro pound. I don't like the pair that much myself, but bounce break spot. If it breaks, there is good space to the downside for the moment, as long as it looks to be bouncing. Probably more space to the upside, but the question is, will it bounce here? And maybe the best way to review that is on a 4-hour chart. Maybe see if price can get that bounce somewhere in this zone. If we do get the bounce, then the space seems to be a little bit more to the upside, right? So that's my 2 cents. Euro dollar Swiss, I can take a look, but one kind of problem is that I don't look at it too often, so I might be a bit blank. It's not my Swiss franc is not my cup of tea, yeah, to put it one way. But let's take a look. All right, so we have looks like a bull flag pattern within moving averages aligned to the upside. And looks like we're getting a bounce. Looks like price very close to challenging this resistance and trend line. So that could be a breakout to the upside. And that could be an interesting space on the dollar. Passing off the 50 fib, the breakout could lead to the minus 272 target. That could be an interesting breakout there. Now the next thing is how to trade it, which is a different matter. For the moment, it is looking like it's breaking. If it does break, there is a good space. So it's an interesting decision zone. Not sure how to trade it though. It could be a bit hesitant with that. I mean, waiting for a little bit of retracement might make sense. If it were to get down to this, it would be perfect head and shoulders here, or perfect doesn't exist, but would seem to be like an interesting one. So 50 fib bounce, yeah, I'm just wondering. With regard to the entry, I'm not 100% sure. I head and shoulders here, but I'm not sure if price will get there. Maybe. It depends also a little bit on this daily candle. I mean, if it's a small candle like that, that doesn't seem too appealing, and waiting for a retracement still seems more interesting. If today, tomorrow, Thursday, there's a candle breaking above this trend line, then I don't think it necessarily has to go that deep anymore. There could be a small retracement of that bullish candle, and then it could continue to at least go to retest the top. So depends a little bit on these daily candles. I think it's too soon to tell. For the moment, still waiting for retracement. Then it does look good for head and shoulders continuation bounce after this 50 fib. If it rather like shows more breakout potential, could be good to look for a daily candle retracement. See if we can see if there's a continuation of that flow right away. Yeah, just sitting on the sidelines at the moment, but there is that space though. Indeed, just thinking how to approach the details still, rather waiting for that. All right, that wraps it up for today. As I said, please check out the webinars. For more webinars, right here you can check out, wrong page, here, education, Forex and CFD webinars. For more info on that, hope to see you tomorrow. Nennet also has a webinar tomorrow. We got a webinar Thursday as well. So looking forward to see you there. Don't forget also the Supreme Edition. Showed you some of those tools that are useful. And of course, the Christmas comes early with Admiral Markets. Click on apply now to find out more details about that. And well, wish you good trading and hope to see you soon. Cheers.